good morning. Thank you guys so much for tuning into today's live stream. It is January 20th, 2025, and let's get right into the charts here. So to begin today, I do want to take a look at what my daily objective is, I guess, coming into today. Based today's daily objective here, we do have, keep in mind that today is a half day, so we are closing in about say like my time at maybe 4 more hours, because it is a half day and we're celebrating Martin Luther King's Day today. But yeah, let's go back to my daily objective. My daily objective was, my daily objective is based off of how we closed here on this specific candle's closing, right? It's power of 3. That candle is suggesting to me that we are most likely going to take out previous day high, which ends up being previous week's high as well. So the weekly candle here, so weekly power of 3 or weekly order flow is that we are going to continue higher, based on the way that we close here last week's candle. And previous day high and previous week's high is the same exact high, meaning that we should complete that weekly objective within the next day, within the next daily candle, right? Because they have the same high. This idea is called scoping. It allows us to know when prices should complete its objective in a matter of time, right? So for us here, instead of completing the weekly objective within the next week, we were supposed to treat this order flow so it basically, the daily time frame told me that, hey, we're going to complete the weekly objective within the next day. So I had a bullish bias here coming into today and I guess this week in general. But after we complete the weekly objective here on NQ, I can no longer use the weekly candle as a bias anymore, right? I have to start using intraday models or maybe even daily candles as my bias, my higher time frame bias. But notice, keep in mind here that the daily objective also got completed, so I can no longer use this weekly candle, this daily candle as my intraday, or I guess my higher time frame bias now. So now I have to rely on the intraday time frames, such as the 4 hour, the 6 hour, as some sort of bias, right? So for me coming into this morning, I'm going to have to rely on how we close on the 8 hour time frame as my intraday order flow or intraday bias. But yeah, if you guys, so the same idea here is, I have the same idea here on ES as well. I wanted to see us continue higher here, take out previous week's high. So this is the weekly candle here from last week. And with the way that we opened here, we had we had that retracement back inside a fair value gap, and we continued to expand higher here. Previous week's high was my target, and previous week's high ended up being the same high as the daily high. So what does that mean? The idea of scope again, because the daily high is the same high as previous weeks, I can anticipate for the weekly objective to be completed within the next day. So there we have done that. So we completed the weekly objective and we have completed the daily objective. So now coming into today, like I said, I'm gonna have to rely on how we close here on the 4 hour candle. That's yeah, we're about to close here on this 4 hour candle and this 8 hour candle in about 20 minutes. So with how we close, that's when I can determine how I will treat this morning. But yeah, I'll let time do its thing, and prices, I guess, marinate. But if you guys could see, I do have a trade going on right now. My setup was, so let's just go back to my Discord. I need it. It's a little bit easier because I explained it through there. So my setup here last week, or I guess today, is based on how we closed here on the bi-weekly candle. So let me show you guys what I'm referring to. So this is the bi-weekly candle I'm talking about. Right, this candle right here. Based on that candle, I can anticipate for, just based on how we created on how we closed here on that candle, I can anticipate for previous weeks, or I guess previous bi-weekly candles high to be taken, because we closed rather bullishly, right? And so my higher time frame objective here for this trade, I guess, is previous bi-weekly high. And my model here is actually based on the weekly candle. So I went from the bi-weekly to the weekly. And notice how the weekly candle here, so this is the weekly candle's high. And notice how that weekly high, that bold black line, is completely separate from the bi-weekly high. That is telling me that we're most likely going to treat, we're going to expand high. We should expand higher after completing the weekly objective to attack the bi-weekly high, which we did. We attacked the bi-weekly high just now, and yeah, we're just going to only continue to possibly expand higher. But yeah, that's so my higher time frame objective, bi-weekly high. My model here is based on the weekly candle, but more specifically the daily, because like I said before, the daily candle's high is the same high as the weekly high. So that means that we should complete the weekly objective within the next day, I guess. And my entry pattern here was this 10-hour fair value gap. It was to be treated as a gap that could be rebalanced, right? Here, that's the entry pattern. So that's everything I have in for this trade, right? So higher time frame objective was to take the bi-weekly high. My model is based on the daily and the weekly candle. And my entry pattern is a 10-hour fair value gap. And note, I did this at 12:53 yesterday, so during the afternoon yesterday. And this is where I am at right now, currently, with my position. So I do have two more runners here running, but I do have runners trying. I'm going to try to target that negative 1.5 standard deviation, and I'm probably gonna have another take profit here at the -2, or maybe I'll have it I'll have it at this -2 standard deviation, simply because notice how the -1 standard deviation, so from this swing high, from this swing low to this swing high on the hourly time frame, its -1 standard deviation exactly aligns with bi-weekly high. So existing liquidity, or the projections, the standard deviation projections, is in alignment with existing liquidity, right? That makes these standard deviations right here that I'm kind of like looking at here more probable to be taken, right? I can anticipate for those swing points, I guess, in those to be taken. So that's what I have right now, and we'll see what we do from there. And let me just notify my Discord that we are whoa. Order. Download picture, Control Alt delete. Oh, Control Alt save. So I do want to save that into okay, so here we go. Sorry, let me. So I do want to send it over to my Discord. Letting So yeah, I mean that was the breakdown for my trade there this morning. Pretty simple, very simple trade. It's a not the usual 15-minute model, but every single time frame it's fractal. Prices is fractal over and over. I'm like, this just shows you that the idea that it's super fractal. And like every single time frame has an objective, right? If I can just view the daily candle as a 4-hour candle, and vice versa, if I can view a 4-hour candle as a daily candle, it's easier to understand the fractality of the markets once you kind of approach it like that. And there is SMT here. Between NQ and ES at these lows. So I'm actually going to denote that right there. SMT, pretty important. SMT with NQ. So at every swing point, at every important swing point, and at every important, I guess you can say, yeah. At every swing high and swing low, there will be SMT, right? It's just something that's just like, it's a characteristic of the markets. There will always be SMT, and there's always going to be there's always going to be SMT at some sort of important swing high and swing low. So I don't want to see that SMT low be taken anymore. I don't want to see us retrace back inside there if we're going to maintain bullish price action, right? All right. Very interesting day so far. I do want to go into my pros and cons here with you guys. So let's take a look at what's happening in that section of the live stream. All right. Oh yeah, let's take a look at what NQ is doing too, because yeah, we do have a larger SMT now between NQ and ES. So ES has taken out its bi-weekly high, however NQ did not. So yeah, we do have some sort of SMT right now. So if NQ can play catch up, then that would be great. But yeah, we'll see. I mean, I wasn't really anticipating this much movement here coming into today, just because it's a half day, and we do have a bank holiday. But yeah, it's just super interesting. We had a decent amount of we had a 112 point range here right at 8:30, so that's kind of interesting. I'm not entirely too sure what happen, but there was something in the markets that made it move. So that's good to note. I believe one of my improvements here next week is actively, okay, so I'm going to continue to look at the markets here at 9:50, just so I don't have to be like, oh, I gotta, I don't feel rushed, because last week, if you guys were on the live streams, there were 2 trades where I took right at 10, and it was literally right after I finished the pros and cons, and I kind of had to, quick maneuver, and it was too frantic, right? But yeah, 9:50, here we go. Let's take a look at what ES is doing. Kind of don't need this anymore. Kind of distracts me here. And let me make these a little bit smaller too, so it's not too. Okay, so that's more reasonable right there. But yeah, like I said, we had SMT here with NQ and ES. ES ended up taking out Asia's low of day, or I guess Asia's low, and NQ did not. So like I said before, a swing high and a important swing high and a important swing low will always be accompanied with SMT. And if we're going to expand higher here, coming into today, we should just like I said, if my trading platform allowed me to continue to like hold trades overnight, I would, but I'm sure they're gonna close me out of this trade at 12 p.m. actually today Eastern time. So I do want to see us to continue higher possibly, just cause like I want to see these this standard deviation get taken here on the hourly time frame. I want to see us like at least trade up into this -2 to -2.5 area here. But I mean, anything could happen. This next 8-hour candle and this upcoming 4-hour candle, I'm anticipating, like if we were to close right now on that 4-hour time frame and this 8-hour time frame, I can anticipate for the 4-hour high and the 4-hour low to be, or sorry, the 4-hour high and the 8-hour high to be taken, right? And what's happening right now? Scope 4-hour high is the same high as the 8-hour. So that is telling me that we're most likely going to complete the 8-hour objective within the next 4 hours, because the 4-hour high is the same high as the 8-hour. So like I said, there's scope, all of those concepts, they happen on every single time frame, because prices is fractal. You have to remind yourself, prices is fractal. Every single time frame has an objective, right? It's just, are you able to align yourself with multiple time frames and get the, to be in alignment with those time frames. So this, like I said, this upcoming 4-hour and 8-hour candle, I'm anticipating for prices to attack that green line. I want to see us expand higher, and to possibly create a 4-hour fair value gap. So this next 4 hours that we're going to go through here after 10, I want to see us not have a immediate rebalance. So this blue line right here that says IRB, I don't want to see prices trade all the way back down into it, because I want to see us create that 4-hour fair value gap to maintain, strong bullish price action. So I believe I moved my stop losses there. I'm not entirely too sure. So I didn't do that yet. So I'm gonna move my stop loss here, just because, like I said, I want to see us create that 4-hour fair value gap. So for us to maintain bullish price action, I want to see us continue higher and not trade back inside that IRB, that blue line, right? Oh, and let me just take off these positions too again, because they're kind of distracting. And if we objectively take a look at how we create this 1 hour fair value gap, this 1 hour fair value gap here is suggesting to me that we're most likely going to treat this fair value gap as a breakaway gap, meaning once prices opens up here on this 1 hour candle here, at least on ES, I don't anticipate for prices to trade back inside here to continue higher. I'm anticipating for us to treat that as a breakaway gap and for us to do something like this. So we could possibly trade back inside some sort of like 15-minute fair value gap or like 30-minute fair value gap, but I'm not anticipating for us to trade all the way back inside this fair value gap before we take out the 1 hour high. I want to see us take out the 1 hour high slash 4 hour high slash 8 hour high first before possibly rebalancing this inefficiency. Oh, sorry, to go back to the idea of scope again. 8 hour high, 4 hour high, 1 hour high. They're the same highs. So I'm anticipating now for us to complete that 8 hour objective within the next hour. Like I said, scope is fractal. And let's take a look at what's, okay. So notice how the 1 hour high, the 1 hour candle is suggesting that we're most likely going to continue higher. But take a look at the 15-minute and the 30-minute. So now I can't use the idea of scoping, right? Because the 15-minute is suggesting that we're most likely going to rebalance this inefficiency. So the next 15-minute here, if we do close like this on this 15-minute candle, I can anticipate for us to rebalance the inefficiency that we could possibly create here. Rebalance inefficiency to possibly continue higher. But yeah, so the 15-minute high, that means I can anticipate for the 1 hour high to not be completed within the next 15-minute because there's no alignment, right? The 15-minute right now is not in alignment with the hourly or the 4 hour or the 8 hour. It's suggesting that we could possibly continue lower or go lower for a reason. And I feel like that reason is to possibly create or rebalance a inefficiency. So we'll see. We have about 3 minutes or so. So there's that. Hopefully you guys are catching on to what I'm trying to explain to you guys. I've always been a bad, or just it's a little bit harder for me to explain things, but hopefully the way I'm doing things right now is a little bit easy for you guys to understand what I'm trying to say and explain, I guess. But yeah, that's the idea here coming into today. Very, very basic stuff here on I guess easy stuff on ES. And I mean, this trade that I took, all I did was execute. The markets provided me with the model. It provided me with the higher time frame objective. It provided me with the entry pattern. All I had to do was click the button. If one of those requirements were not met, I'm not going to take the trade. There are countless times where I'm able to understand where prices wants to go here on the higher time frame, but I just simply don't have an entry pattern. That's completely fine. My time will come, right? There will be opportunities for me to be able to take something. It's just sometimes they're not present. But like I said, in this one, I guess, in this specific trade, all of the requirements were met. I just simply press the button and then I just let prices do its thing. Let's take a look at NQ. NQ, same thing, suggesting higher prices. The way that we're creating this 1 hour fair value gap here is telling me that we're going to treat it as a breakaway gap. Reason being, the way that we're closing here on this hourly candle, so that blue line is above this red line, right? So let's backtrack a little bit. A fair value gap is created with 3 candles, right? There is one candle. I'm gonna make these pink, or actually let's make it purple so you guys can distinguish. So there's one blue purple line, 2 purple line, 3 purple line. So that means there's 3 candles. And the second candle, so you guys can now see what candles I'm talking about, right? So the second candle being this one at 8 a.m. its high is 21,695. And the way that we close it on this hourly candle, the third candle, that blue line, we closed above the red line. So that means I'm going to have to treat this 1 hour fair value gap as a breakaway gap. So I don't want to see prices open up here on this hourly candle and trade into this inefficiency. That's not what I want to see. I want to see us open up on this 1 hour candle, maybe trade into some sort of lower time frame inefficiency, treat this as a breakaway gap, and then continue higher. So I don't want to see us go lower here. And that's my theory on breakaway gap. ICT, I'm not too sure how he taught breakaway gap, but that's just how I view it, right? It's a little bit more simpler. It's a lot more objective for sure than just, oh, I'm gonna treat this as a breakaway gap, but there's no reason behind it. It's too subjective with the way he's teaching it, but the way I view it, that makes it a little bit easier. But I'm grateful for ICT to introduce to me what a breakaway gap is, and this is how I kind of view it too. So I want to see that hourly fair value gap here get treated as a breakaway gap. So my morning objective here, coming to January 20th, 2025, is I want to see higher prices here. So notice how that 4 hour candle and this 8 hour candle are both suggesting to me that we're going to continue higher, right? The 4 hour high is the same high as the 8 hour. So I'm anticipating for those two, for I guess that objective to be completed within the next 4 hour. But more specifically, we should complete it within the next hour, because that's what the hourly time frame is telling me. So notice how the hourly high, 4 hour high, and 8 hour high are the same. Same thing as ES. Let's take a look at it on the 15-minute time frame. So here, I'm not taking this model. Why? The 15-minute time frame, this candle right here, is not in alignment with the hourly or the 4 hour or the 8 hour. It's the hourly is suggesting higher prices. The 15-minute, however, is not. It's suggesting to me that we're most likely going to take out the 15-minute low. So there's no alignment between the 15-minute and the hour. So I'm just going to have to wait for some sort of alignment. And yeah, that's pretty much it. Is there anything else I do want to cover as of right now? So no trades were present this morning. But I do want to note what the weekly open is here, because it's extremely important. ES, what's the weekly open? Here's the weekly open. And one important thing that I forgot to mention to you guys was that notice how I took my entry, right? I took my entry below the weekly opening price, because if you're anticipating a up close candle, right? If you're anticipating some sort of candle like this, it's a up close. Oh, whoops. It's a up close candle. That means this candle here, this candle's body, let's make it green. That means I'm going to have to treat this. So in this specific case here, right, I'm going to treat this candle. So that means like as an up close candle, right? So this next candle here should be something like this. And I want to see us take out this candle's high. So this is the candle's high here. Make that a green line. So that green line is my objective, right? And if I know that that green line is what my objective is, then I want to be a buyer where we open, and I'm gonna make the opening price a thick red line. So that red line is where I want to be, is kind of where I want to be a buyer, right? So ICT states that if you're anticipating the next daily candle to be an up close candle, or yeah, in this, I'm just make it up close candle for in this example. If you're anticipating a up close candle, you want to be a buyer below the midnight opening price. So you want to be a buyer below the open, right? So any setups here in this specific model here is I want to be a buyer below the red lines. Technically, buying below the open is like discount, and I'm going to be targeting the green line and, you know, stops somewhere there. But that's essentially what I did in my trade, right? Because I'm anticipating, because I'm basing my idea here on how, I'm gonna just go back here. Because of this weekly candle, right, I'm anticipating for the weekly high to be taken. And to make it a little bit more easy for you guys to understand why I'm anticipating previous week's high to be taken, this is a easier explanation here. Very objective, very, very objective. There's no subjectivity. You can't be subjective with the way that I'm trading. Okay, so is the green line here closer to the red line or the purple line? Literally, is the green line closer to the red or the purple? The green line is closer to the red line. So that means it's more efficient for prices to come up to here, right? Is for us to take out that red line. At least that's the bare minimum. So my objective here for the next weekly candle is for us to take out the next, or is for us to take out the weekly candle's high. So I can anticipate for the next weekly candle, right, to be some sort of open, low, high, and then I don't care where we close. My initial objective is for us to take out that red line. So once we take out that red line, my weekly objective is complete, right? There's no reason for me to be a part of the trade anymore. So I want to be a buyer below that green line, essentially. I want to be a buyer below the opening price. So let's say we had a gap up and we open up like right here. I'll make that a green line. I want to be a buyer below that blue line, right? The next weekly opening price. And that's essentially what I did on my model. We opened up here 60.32, and like I said, I took my entry at the 10-hour fair value gap, and the 10-hour fair value gap was below the weekly open. So weekly open, I said 60.32. I took my entry at 60.29. So I'm technically buying in discount. So it's reasonable for me to take an entry there, right? And yeah, I think that's gonna be all for, I guess, the actual markets here right now. I do want to take a look at my pros and cons. Oh yeah, before I do that, I'm gonna get some water. And my friends, sorry, this is a little bit off topic, but my friends got me a mini fridge for my birthday, and man, it is so cool for me to have a mini fridge in my room. It is super, super dope. Give me 1 second. Look at that. I have freaking cold water in my room. I don't have to step outside my room to go into the refrigerator or anything. I just have cold water on standby. Super, super dope, and I'm super grateful for them. Oh, cold water. All right, let me just see if there's anybody on YouTube too. Do we have anybody on today? Let's see. we had a viewer here. It was on and off. He stayed for 6 minutes. Interesting. Okay. All right. So going into the pros and cons here for today, or I guess for last week, here are some of the things that I was able to do last week that is going to help me be an overall better trader, right? The first thing that I did last week that was, I guess, a quote-unquote good, or something that I should continue to do, is in every single trade that I took last week, in every single trade last week, I was able to identify what a higher time frame objective was, what my model is going to be, and what's my entry pattern, right? I can explain to anybody what my higher time frame objective is and what my entry pattern is. All of those requirements got met, and I just simply pressed the button. The outcome isn't something that's in my control, right? So I shouldn't really worry too much about it. So once I click a trade, I have to completely disregard what the outcome is going to be and just simply focus on what I can control, which is how I'm going to execute. If two things don't get met, right? Let's say I know what my higher time frame objective is, I know what my model is going to be, but there's no fair value gap. I don't take the trade. That's something that I can control. I can't control whether the trade is going to pan out in my favor or not, right? Yeah. Be more concerned of how you execute than what the outcome is going to be. And that's going to, it's a psychological warfare for sure. But once you're able to grasp that, concept, and you'll get more comfortable, not comfortable, but it'll be easier for you to actually execute if you view things like that. Because when I first started, the outcome was the only thing that I was worried about. I was extremely focused on, I have to make this amount, I have to make this amount, this trade needs to be that's something that I can't control. And having to rely on external validation or any external events for you to feel a certain way is something that is not valid. You shouldn't do things like that. That's not how you should operate. Set things that are, only keep in mind the things that you are in control of, right? Second thing here, implemented a standard deviation projection. So last week I had a trade where I was able to use standard deviation, and like I said, coming into this week with the trade that I showed you guys here, I was able to implement that standard deviation, and we ended up being able to align existing liquidity with a standard deviation, which makes it even more probable that liquidity is going to be taken. So if projections are in alignment with existing liquidity, it makes the projections more probable. It's higher likely for prices to take out that liquidity. And third, stay patient with the charts. There was never a time where I felt, oh man, I haven't taken a single trade this week, I'm just gonna press the trade for fun. There was never a time I felt like that. And you can't force things to happen, right? You can't force a trader to just suddenly appear. You're not in control of the markets. Whatever the entity, whatever the algorithm that's in control, it's not you, right? It's not your mind. It's not your mind. There are times where you go maybe a day, a week without any opportunities that get presented, and you have to be able to maintain discipline and confidence and patience in your model that it will come. It's just the time isn't right now. And for you to, I guess, negate that feeling, journal, review your journals. That's going to only enforce like good habits, right? And a good thought process. So stay patient, standard deviation, and followed my trade plan, right? Higher time frame objective, model, entry pattern. What can I continue to work on? When analyzing a trade, don't do it frantically. So like last week, it was a little bit, like last week, I was doing what I'm doing right now, pros and cons, right? And when it turned 10, I was like, oh shoot, let me take a look at what the markets were doing. Turns out there was a model that got presented. I wasn't able to break it down like how I would want to, and then yeah, it just felt rushed. But this week I'm going to, if I'm doing a pros and cons right at 9:50, I'm just gonna stop, pause, doing the pros and cons, and then I'm just go back to live charts, and yeah. And with the way that I view prices, right, there are like, I guess, time intervals where I know that I don't have to do anything. Like, I don't have to be present in front of the charts always, right? Every single, like, the way I trade, I don't rely on the 5 minute or like, I don't base my models here on the 5 minute or 10 minute, and I base the lowest time frame that I'll go to is the 15 minute as my model, and so that means that I basically have an interval between every 15 minutes for a new objective to be presented with, right? And so like I don't have to be in front of the charts always. That's also another thing that like benefited me with the way that I view prices, is that I don't have to be in front of the charts always. And second thing here, that something I can work on, is maintain focus on a specific task at hand. And this doesn't only apply to like trading here, this applies to everything. There was this video on YouTube, and it explained basically about momentum and really focusing on a task. There will be times where you try to do two things at once. You're trying to become a excellent basketball player, and you're trying to become a excellent football player at a time. The best that you'll be is mediocre in both those sports. But if you invest all your time into basketball, you'll excel at it. And like juggling, going back from a basketball activity to a football activity, it's really hard to build a momentum, right? And momentum is real. You start to enter that flow state where like everything just comes to you, and then you just stop, and then you go on to a different activity. It just disrupts your whole energy and your whole vibe. So stay focused on whatever you're doing, complete that assignment or objective, and then move on to another. Third thing here, for me, I can improve on is to continue to align my thoughts and my actions with my goals and values. There are times where, like right now, I know I'm in alignment with what I have to do, but there's a lot of time in a day, or a decent amount of time, right? And there are times where I would spend it, maybe on YouTube or something, and it's not really benefiting me. It's just like my, just something that I have to continue to work on. Think to yourself, is what I am doing at this current moment going to benefit me in any other way, in some way, right? For me, is playing Clash Royale going to benefit me in the future? Absolutely not. It's not going to do anything for me. And that's just something that, I have to limit. So I have placed limits on, my, Clash Royale, 15 minutes max a day. Reading anything, or not, I guess not reading it, reading manga, 15 minutes a day. I don't have any social media on my phone, which is good. It creates a more positive environment for me to be around, but I can't get rid of Instagram on my computer. So there are times where, I'm studying and I go on Instagram on my computer. That's just something I have to work on, and I'm mindful of it, right? But I have to continue to practice that discipline to continue to align my thoughts and my actions with my goals and values. So here for the improvements here next week, I have to be able to identify and explain to anyone what my higher time frame objective is going to be, what my model is going to be, and what my entry pattern is in every single trade that I take. And this is only going to benefit me, right? This for sure, the way that I'm doing things will for sure limit the amount of trades that I do take, but there's nothing wrong with that. As long as I have a consistent model and how I execute on things, it's only going to go up like that. But if I, take inconsistent models and it's just, a lot of up and down, I'm not going to go anywhere with that. I have to maintain a disciplined approach to how I take trades. Second, actively watch the market. So at 9:50, I'm in front of the charts, right? I'm not doing anything else. I'm not doing my pros and cons. I'm not doing anything except watch the markets at 9:50 a.m. Maintain a laser sharp focus. So this is, like I said, be focused with the task at hand and aggressive trading. So the trade that I took this morning, I actually was risking about 1,000. That one, but yeah, that's gonna wrap it up for the pros and cons. Yeah, if you guys do want to join the Discord, I do post my weekly market analysis here, always around 11:30, 12 p.m. on Sunday. So you guys get to see what I have for as a weekly bias. But now, I do want to go and take a look at what the daily stoicism quote is going to be here. Daily stoicism. Alright, so the daily stoicism quote is, you could leave life right now. Let that determine what you do and say and think. Marcus Aurelius Meditations. So the tone of this is kind of giving me that life is short. You have to understand that today is a blessing. Don't take it for granted. Breakdown. Mortality is a guide. The reminder of death, memento mori, is not meant to induce fear, but to inspire urgency and clarity. Knowing that life is fleeting, every moment becomes an opportunity to live with purpose. If you knew today could be your last, how would that change your actions? How would that change your approach on life? Would you spend time worrying about trivial matters or invest in what truly matters? Relationships, self-growth, meaningful contributions. I don't think there's anybody that would trade $1 million for having only for a day in your life, right? If you knew that if you took the $1 million that you wouldn't be able to wake up the next morning, you would never take that $1 million. And there's a quote that I saw. He asked the question, would you take $1 million? But the only downside to that is that the day that you take that $1 million, the next day you won't be able to, you're not gonna wake up. And the guy was like, no, why would anybody do that? And then he's like, okay, so live every day as if you're worth more than $1 million, right? And that's how you should live. Align your thoughts and actions. So this is exactly what I was referring to. Let this awareness guide your choices, right? Speak words of kindness. Act with integrity and think thoughts that bring peace and fulfillment. the things that you do in the things that you think, they're all of those actions and thoughts, they're consciously you're consciously thinking about them, right? But those conscious thoughts and actions will sink into your subconscious mind, and your subconscious mind will, do its thing and like propel you. Because think of it as like your subconscious mind as like passive income. It's always going to be working. So only feed it good things, right? Don't feed it anything that's negative. Think good thoughts, and your subconscious mind will take care of everything else. And yeah, that's the quote for today. Is you could leave life right now. Let that determine what you do, and stay and think. There we go. And that's gonna wrap. I think that's gonna wrap it up for today's. To be honest, thank you guys so much for tuning in, and until next time, I will